Good evening, everyone. Time for another silver update. You're looking at the daily chart of silver, and you can see we still have a positive MACD crossover on the daily. The other one I was pointing out was the 8-hour. That has kind of topped and is starting to roll over, so we'll have to wait and see how that works itself out. The weekly is still crossing over, although you can get these stutter moves, so it's possible to cross up and then down, or down and then up. They've happened in the past, so we can't say for certain that this is a move that's going to go all the way up, something like this. My expectation still is that it will do that. We had a tremendous down day in the gold market. I'm going to talk about a Zero Hedge article that addresses that. I think that they mentioned that we had a 100-point down move. Not quite. We're looking at about 1912 to around 1820, so roughly a $90 move in the price of gold, which is just phenomenal that we see this kind of volatility. Now, we saw something like that in the stock market today. We had a 322-point up day. As I pointed out in the past, these types of volatile moves up and down generally tend towards bearishness, just because most stable market climbs are slow and steady, and as I pointed out in the chart of the Dow from 2008, and I'll go ahead and just revisit that real quick. If you look at the Dow chart from back in 2008, we actually had much more volatile moves going on at that time, and we have to go out to the daily to see those. So you can see we had in this time frame, which you can see is kind of like a mirror of what we're seeing here, but we had runs from 7,800 to 9,800. This is 2,000 point swings up and down here. So I still expect this to be a continuing down move. Let's go in a little tighter. So I don't think we're out of the woods yet on this. I think it's pretty clear that the long uptrend has pretty much been broken. If we go out to the daily, we can see the bottom that was put in the spring of 2009 pretty much holds at 4 points. So I definitely think there's more downside to go. Wanted to take a look at Bank of America because I've been covering that. I think that it's a dire situation. If you'll note, we put in 563 million shares of volume. So to get an idea of how big that is, we want to look at the float. Of course, the float of a stock is the amount of shares that are available for trading as opposed to shares outstanding. Now, in the case of Bank of America, there's actually the same number. That's normally not the case, but in this case it's the same. So you're talking 10 billion shares outstanding, and of course with the need for Bank of America to raise capital, there's a lot of talk about dilution of that 10 billion, so that number could increase quite a bit. But you can see that 500 million shares traded, and that's roughly 5% of the float. So that's not really the type of thing that you saw with Lehman and Bear and some of the others that were trading over 100% of their float. But on a day that we had with a 300-point rally in the Dow, you can see that Bank of America is still very sick. So if this turns and goes down, it may turn and go down as well. So I wanted to look at a little bit of the historical volume to give you an idea. Today was an extreme day, or at least a very high volume day. You can see today we put in 562. We have to go back to, and you want to keep an eye on the price, you want to keep an eye on the lows. Our low today was 601 on a volume of 562. To find that kind of volume in the past, we have to go back to August 8th, and we did a low of 631 at 682 volume. So to get an idea of how large those volume numbers are, we want to go back and look at the middle of the financial crisis. So we'll choose January 1st, 2008, and we'll track that through January 1st of 2010. That should give us some numbers to compare. So you can see the average volume, the low volume type thing, is around 100 million. So as we go back into the financial crisis and we work back, you can see some 300s, 300s and 400s. And we're in the 16s here in the middle of this. A lot of steady 400 days, 400, 300. Now when we get back to near the bottom that the stocks put in, that ultimately ended in this, or ultimately resulted in this very long rally, which started in the month of March of 2009 and still going today, although it appears to be failing. You can see we have a 1.2 billion share trade day, and that occurred at about 11. We had another 1 billion share day at 9.55. And the other key date I wanted to point out was the low that we achieved in March. Of course, that was the bottom for the stock market, and we had at the low of $3 a share on Bank of America, we had, well, actually no, our key low is here at 253. We traded 840 million shares. So we had a bottom of 840 million, and you can see the volume it fell on. There's some really thin days that happened through the year of 2008. So just to put that in perspective, we did 563 million shares today, as opposed to an average daily volume of 132 million. So I'm not willing to say that Bank of America is out of the woods yet. It's a very ugly chart, especially on a day when the Dow did 300-point gain. You can see that Bank of America is strongly lagging for those days. So I'm still keeping an eye on that. I'm still keeping my projection for probably bankruptcy within the next month. I think there's a lot of skeletons in the closet. I think Bank of America is really in big trouble. So let's go over and look at, first I want to cover my recommendation for silver. Of course, when the silver price is falling, I'm always going to try to recommend physical purchases to make, because the whole key to the game is physical. So we want to always try to keep our eye on the ball, which is stacking physical silver. And I went through and did an analysis of Gainesville. I didn't really see a lot of the Perth that I've been recommending, but I did come across on APMEX, which still has let's go real quick to the America the Beautiful ones that I covered. the one that I had recommended was the cheapest one, and that was the Olympic, and that's $221 now, so it's still higher than when I recommended it, but there were about 4,000. Now there's only about 2,800 left. Had a commenter comment about how I was trying to take credit for that. I'm not trying to take credit for that. I don't have any idea if what influence I have. It doesn't really matter to me. I'm just pointing out what's available. So we want to look at the Canadian Grizzly is the one that I really like right now. If you buy it by check or wire, you can get it for $46.89. Now you can see that the Canadian Wolf series, they only have about 200 of those left. They still have a lot of the Grizzlies left, about 8,000 of those. Now on a numismatic basis, comparing these two coins, I would say that it's a close race. I think the tie probably goes to the Timberwolf, but it's pretty close. So I don't really see at this point how you can go wrong buying this Grizzly coin. It's 4 nines, and that's a signature of the RCM. That's great to have that purity. It's highly collectible in my opinion. It is very rare. At least they say that the Canadian Mint has placed strict low mintage on these coins. So this is going to be my recommendation for this type of drop that we're in. I don't know how low we're going to go, but as we go lower, you always want to step up and buy more. You don't want to buy on the spikes, you want to buy on the dips. So I can't recommend this coin more highly. I think it's a great buy. Even though it's $4.50 above spot, I think it's a great buy. You can buy it on the dip and make back most of that premium just by getting a low price. The last thing I wanted to talk about is the article that's on Zero Hedge about precious metal margin warfare, and I think it's Tyler who's commenting, but he's saying, if you're wondering why gold dropped by almost $100 today, wonder no more. Today, the Shanghai Gold Exchange lifted gold margins forward contracts the second time this month to 12% beginning Friday. So it looks like we've got a margin hike in Asia. Now that's very interesting because, and it goes on, but I really just wanted to use this as an opportunity to segue into the main point I wanted to make, is that the traditional speculation is that the JP Morgans and Goldman Sachs and other banks of the world that are trying to prop up the dollar are behind the gold and silver suppression schemes. And the idea is that the way that they will pump up and preserve the world reserve currency, the US dollar specifically, is by suppressing the price of the precious metals. So that's the major conspiracy theory that's out there. Now, a secondary theory, and I think that it has quite a bit of validity, is the idea that actually it's the Chinese in collusion with JP Morgan and HSBC and the others. And the reason why I think this holds some weight is you want to look at endgame types of scenarios. Now, if China is, and I think China is pretty clearly a player who has determined that their long-term strategic goals need to be based around the accumulation of natural resources. Now, if you agree that that's the case, it would clearly be in China's interest to use the paper price of these metals to suppress the physical price if that allows them to continue to accumulate physical metal. So I don't know what the answer is to this. I'm just throwing out speculation. So I know there's a lot of people who comment, but it's definitely in my mind an open question as to whether or not China is more interested in seeing the price of precious metals rise, or if they're actually interested in seeing them fall as much as they can to possibly accumulate as much physical as they can. And of course, if that is their strategy, I think they're probably right in that, and I think that that's probably what you should do, because at this point it's going to be a game of how much physical you can accumulate before the paper bonfire starts. Because when the paper bonfire starts in the theater, the proverbial saying, once they light the match and slam the doors, it's going to be too late. So you want to have the physical, and I think that China is probably mainly strategizing how they can accumulate as much physical as they possibly can, and in some instances that's going to have to do with raising margins, crashing the price, and jumping onto the LBMA and getting more physical. We'll have to wait and see. I'm not sure, but that's speculation, and we'll talk to you next time.